Now, I am not a fan of showing steps before we get into numbers and examples, but here it is. We will talk about step. And I say I'm not a fan and I'm the one who made this, but it's just good to dive into it, right? Ease into it. You can always come back to this after we run through the numbers. So, what are our processes for the percentage of completion method? Well, okay. Step one, we got to determine, all right, first off, what are the total costs and what are the total revenues? So, like I said, we're not worried about time here. Time is irrelevant for percentage completion for construction. We are recognizing revenue based on our costs. So if we've got a total of $1 million, no, let's use $2 million of revenues, right? 2 million is promised of revenues. And total costs are, so total expenses, I'll call them costs. Costs are $1 million. This is essentially our cost driver. If you want to think about it in cost accounting terms, that's our cost driver. So in year one, what are we going to recognize? Well, in year one, we have $100,000 of costs. $100,000, like I said before, divided by $1 million is going to be 10%. So 10% is what we can recognize. Recognize 10%. And recognize 10% of what? Recognize 10% of revenue of $2 million. That is going to allow us to recognize $200,000. And you may be asking me, hey, Nick, some of these questions you'll see are going to ask for gross profit. What gross profit do you recognize? And I'll answer to you and say, the question depends. Some questions will ask you, what revenue do you recognize? In which case you'll use the revenue amount. But if it asks you, what is the gross profit to recognize? Well, what is gross profit? We know gross profit from our income statement section is going to be revenue minus cost of goods sold. And I'll just use costs here because we're not going to get too in depth. So that is $1 million of gross profit. So if we use the same metrics, we use 10% of 1 million, we can recognize $100,000 of gross profit. So both of these are true, right? Both of these are true. It just depends what the question is asking. So the question could be asking for what's revenue, in which case we would do it by revenue. If it's asking for gross profit, we would do it by the gross profit. And those are our other steps, right? So estimated total revenue times percentage complete. That's the revenue to be recognized to date. Now, that was just for 1 year I did. We're obviously going to have multiple years. So we need to determine the current period revenue. That means we're going to subtract out the prior recognized revenue. Meaning, let's say now we're in year two. Let's say this is year two. And I'm going to get rid of all this. We'll stick with the revenue. You kind of understand the gross profit. It's the same thing. It's just depends what they're asking for. So let's say now we're in year two. And in year two, well, we've already recognized 200,000 in year one. So let's say we do another 10% in year two. I'm not going to go through that process again. We just did another 10%. So 2 million minus, we already recognized 200,000. So we have $1,800,000 to recognize left. Now we would do that times 10% because this 200's already been recognized. We're not going to account for that again. And now we're going to recognize $180,000 of revenue. And then, so you can really do, if it's gross profit, you can do the calculation before or after. Just make sure you're subtracting out the costs, revenues minus costs. We will see questions as well that change the estimated costs because in real life, that's going to happen almost all the time, right? You're going to change the estimate of how much costs are going to be needed to complete. And we'll see that basically you just reset, right? So you just reset. In this example, you would change that cost that you divide the cost completed by to get that percentage. Now, what about journal entries, percentage of completion entries? So to recognize costs, we are going to debit construction and process, which is kind of like an asset account. I would describe it as, it's an asset account. And you are going to credit materials, cash payables, whatever you expended for this CIP. This is essentially a temporary PP&E account. For example, I was working on a client and they never fully capitalized their CIP. They just left it as CIP. Part of my project there was to convert them all to fixed assets on their balance sheet. That's what the CIP account is. You won't see it really much other than in this section. Progress billings, okay, accounts receivable, billings on CIP. So this is just, you don't want to wait to collect the money, right? So the cash in and cash out, those are different, right? That doesn't have to do with revenue recognition. That just has to do with, hey, we want our money now because, we've got to pay our bills. And this is that journal entry. When you actually collect the money, debit cash, credit AR. All right. What about other journal entries? Well, what about to recognize revenue and gross profit? All right. So we're going to debit construction in process for gross profit. That's our gross profit amount. We're going to debit expenses because you debit expenses to increase them, and credit revenue. And lastly, our final journal entry here to record the completion of the project. We are going to credit billings on CIP and debit construction in process. That gets rid of the CIP account, and we are going to debit the billings on CIP. Sometimes we say construction in process, sometimes it's in progress. Same thing, not trying to trick you there. That's just how it is. Some questions will say either or, it doesn't matter.